Now, residents in India, Chapter 1, non-resident taxation. So, we will see the snapshot in a concise manner. Residents in India, it is Section 6. It is a basis. So, there only non-resident, resident, everything is being distinguished. When a person could be called resident or when a person could be called non-resident, all these are told. So, what is this? Residential status of an individual, not a company or any other thing. For an individual, it is based on the period of stay in India, actual stay in India. What are the conditions? Two conditions, either or. What is the first condition? 182 days or more during the previous year, or he must be present in India for a period of 60 days or more during the previous year and 365 days or more during the 4 preceding previous year. So, what is the basic condition? Two condition. Both the condition are either or condition. So, first is flat, 182 days or more during the 11 previous year. If it is not satisfied, during the current year, it should be 60 days or more and 365 days or more during the 4 preceding previous years. Now, when this second condition is not applicable, Indian citizen is leaving India for the purpose of employment, therefore second condition is not applicable. Indian citizen is person of Indian origin being outside India, come on a visit to India, then second condition is not applicable. Additional condition, he is a resident for 2 out of 10 preceding years. His stay in India last 7 years is 730 days or more. So, based upon all these things, you can categorize into two. Resident itself, you say resident and ordinary resident. The other one is resident and not ordinary resident. The one more category is non-resident. So, resident and non-resident. In resident itself, ordinary resident, not ordinary resident. So, who is a resident and ordinary resident? Now, he is satisfying 1 and 2. And in basic condition, he is satisfying 1 and 2. And in additional condition, he is satisfying 1 and 2. If that be the case, a resident and ordinary resident. Okay. Now, he is resident but not ordinary resident. So, what is he saying? At least one of the basic condition, that is 1 or 2, he is satisfied. And one or none of the additional condition. This one of the two condition or none, he is satisfied. Therefore, he is called resident but not ordinary resident. Non-resident, he is not satisfying either of the condition. So, if he is not satisfying resident or ordinary resident and resident not ordinary resident, he is a non-resident. This is for individual. Now, what about a company? Company, you have to see, is the company an Indian company? Yes. Here, the concept is place of effective management. Now, with regard to individual, it is called the period of stay. Whereas, here, in company, it is called place of effective management. What is it? Is the company an Indian company? Yes, no. So, whether it is an Indian company, company is resident in India for the 11 previous year. If it is an Indian company, yes, the company is resident for the previous year. If it is no, then the next step is check POEM. Whether POEM of the company is in India for the 11 previous year. If the place of effective management is in India, yes, the company is resident. If it is not, the company is a non-resident. Determination of POEM on the basis of ABOI test. What is ABOI test? Active business outside India. Now, a company is said to be engaged in active business outside India. What does it mean? It is not having active business in India, but it is outside India. So, namesake it is in India, but most of its active business is outside India. Now, first condition is with regard to passive income, next is with regard to assets, next is with regard to employees, next is with regard to payroll expenses. What is a passive income? It is just the opposite of active income. So, income from the transaction where both of the purchase and sale is from to its associate enterprises. So, aggregate of income from the transaction between purchase and sale is from the AIs. And next, income by way of royalty, dividend, capital gain, interest or rental income whether or not involving associated enterprises. So, what is this? Income from purchase and sale, income from royalty, dividend, etc. Now, passive income is 50% or less of the total income. So, if that be the case, it is one of the condition for active business outside India. Now, less than 50% of the total asset is situated in India. So, more than 50 where it is situated outside India. Then you can say it is active business outside India. Less than 50% of total number of employees are situated in India or residents in India. So, more than 50 is situated outside India. Payroll expenses incurred on the employees are less than 50% of total payroll expenses. So, majority payroll expenditure is outside India. Now, active business outside India. Companies may be fulfilling it, companies other than those fulfilling. So, with regard to fulfilling it, you have What is with regard to payroll expenses, the number of employees, and assets as well as passive income. So, if the company is fulfilling, then you can say place of effective management is outside India. Why? Majority of the employees is outside India. Payroll expenses greater than 50% for outside India. Then passive income is less than 50% of the total income. Then you say total assets is more than 50% is located outside India. First, that is POEM is outside India if majority of board of meetings are held outside India. Second point, de facto decision means primary decision making authority is not board of directors but Indian holding company or any other person, then POEM is in India. So, majority of board meetings are outside India for the companies fulfilling the test, then POEM is outside India. Namesake, they are telling that they are resident. Decision making authority is in India, then POEM is in India. Companies other than those fulfilling the test, what is this? Identification of person who actually make the decision, determination of place where decisions are in fact made. Based upon the scope of total income, so we can distinguish whether some incomes are included under resident, ordinary resident, not ordinary resident, and non-resident. Income is received or deemed to be received in India during 11 previous year? Yes. Here it is yes, here also it is yes. Accruing or arising or deemed to accrue or arise in India? For all the three categories it is yes. Now, income is accruing or arising outside India. What is it? If it is received in India, all the three is yes. Included in the total incomes, following incomes are to be included? Yes. Accruing or arising or deemed to accrue in India means all the three also yes. Now, accruing or arising outside India. Then we have condition. For non-resident, it is a flat no. Income has to be included? No. Here, yes, but with conditions. What is this? Yes, even if such income is not received or brought into India. Here, yes, but only if the income is derived from a business control from India. Otherwise, no.